Cryptocurrencies have been around for more than a decade now, with Bitcoin being the very first coin that was supposed to replace the fiat currencies of today. But even today, these are just speculative assets because of one huge problem, and that problem is the price volatility of cryptocurrencies. The solution to that problem would be stablecoins. But which one is better, USDC or USDT? Well, let's find out. So make sure to stick around until the end to know why you should be investing in stable coins. Before we begin, make sure you check out the description below for some of our recommended crypto websites and wallets. Even today, cryptocurrencies are not fully matured to replace fiat currencies. This is all because of the decentralized nature of cryptocurrencies. This means stable coins are a very niche part of the ever-growing cryptocurrency ecosystem. These coins are used by crypto investors as a practical and cost-effective way to do transactions with cryptocurrency. The prices of Bitcoin, Ethereum, or the newer cryptocurrencies will rise and fall by the day, and even by the hour. But that is not the case with stable coins, because these coins promise to maintain their value as they are pegged to less volatile assets like the US dollar or euro. So stable coins achieve their stability through the backing of a central reserve, which means their prices are supported by other assets with universal value, which makes stable coins the best alternative to fight the volatility of several decentralized cryptocurrencies out there. If you like the fact that stable coins are a lot less volatile than most cryptocurrencies out there, then you might be wondering which coin to buy, USDC or USDT. There are different types of stable coins, which means they're not created equal. But out of them all, USDC and USDT are the two largest stable coins of today, as they are consistently leading the markets, and they are available on almost every major cryptocurrency exchange out there. We have USDT as the very first and largest stablecoin that was created way back in 2014, and USDC was launched way back in 2018 by Circle. The purpose of USDT was to bridge the gap between cryptocurrencies and fiat currencies, being the very first stablecoin out there. For the very first time, Tether gave users access to a platform-agnostic, blockchain-based US dollar that shares so many advantages of cryptocurrencies, with their high liquidity but none of their volatility, which is a piece of positive news for anybody who is bullish on the future of cryptocurrency. Tether, or USDT, was successfully able to combine the best of both worlds. Tether created a permissionless way to sell crypto dollars to anyone, with speed, transparency, and lower cost. This way, Tether was able to open up the utility of cryptocurrencies for remittance payments and so much more. Hundreds of cryptocurrency trading pairs began listing against USDT, which gave the coin the first mover advantage in the stablecoin market. As of now, there are 78.7 billion USDT coins circulating on several blockchains, including Ethereum and so much more. USDT is also the crypto market's most popular trading pair and can be used on exchanges to buy or swap hundreds of other cryptocurrencies. That's about it for Tether. What about the other big player, USDC? Well, USDC was created by Coinbase and Circle way back in 2018. Both USDC and USDT are backed by the United States dollar, so the price remains fixed at $1 and is governed by the Central Consortium, which is responsible for overseeing the technical and financial standards for stablecoin. And it also ensures that there is a lot of transparency around a true one-to-one backing. This means that for every USDC created, a dollar is held in reserve in the form of US dollars and other cash equivalents. The circulating supply for USDC is at $50.48 billion, with an equal dollar amount in reserve. USDC, just like USDT, is also available on most major cryptocurrency exchanges, and USDC can also be sent and received by any wallet and exchange that is ERC20 compatible, along with several other blockchains like Solana, Binance Smart Chain, and Algorand. Now you might be thinking, what exactly is the difference between the USDT and USDC, considering the fact that they are backed by the same dollar? Well, USDT is more frequently used for trading and payments, but USDC, on the other hand, is described as the safer alternative since Centre makes a great effort to comply with audits and governmental regulation. It is also more transparent and has fully backed reserves. When it comes to trading pairs, both USDT and USDC are some of the popular choices that can be used as trading pairs on several decentralized finance protocols. But again, the USDT's 4-year head start means that these coins have been long enough in the market to be the widely used stablecoin with highest consistent trading volume. But that does not mean that USDC is far behind. USDC was able to close the gap and is now available on as many blockchains as Tether. When it comes to safety and transparency, USDT is under scrutiny because of Tether's hesitance to release complete and frequent updates on how the chain is backed. Things are different with USDC because the coin's parent company Center Consortium position themselves well in regards to regulation. The company also releases regularly audited reports on their reserves, which means that USDC complies better with regulations, so this coin might be that one you should be buying. Tether was eventually forced to release a breakdown of their reserves in March 2021, but they still fought to prevent their reserve composition from going public. They even asked the New York Supreme Court to block the state's Attorney General from releasing documents to CoinDesk after the latter filed a Freedom of Information request. Ever since then, Tether has been actively trying to become more transparent by publishing the contents of their reserves while also providing daily updates. This might be a good start, but the Commodity Futures Trading Commission and several others are calling out Tether to perform a full audit. When it comes to USDC, the company behind the coin is playing things safe by complying in order to position themselves for a potential future government regulation. Circle releases monthly audits into their reserves by accounting firm Grant Thornton LLP. They also pledge to only own US dollars and short-term treasury bills, and may even apply for national charter to start their own digital bank. Circle CEO Jeremy Allaire said, "There's a reason why USDC is regulated and supervised by banking regulators under the same laws that supervise the balances you hold on PayPal, or with Apple, or with Square. Those things have applied to us since day one, and those statutes exist so that people have confidence in these electronic payment systems. And I think that's really important. There are high chances for greater regulation of stablecoins because the Biden administration very recently published a report calling for greater regulation of stablecoins, and the Treasury Department has also pressured Congress to pass legislation requiring stablecoin issuers to become insured depository institutions, something very similar to a bank. So with all the stablecoin regulations around the corner, it is vital for issuers to take precautionary steps that are necessary to not be caught off guard once such laws are passed. So releasing audited reserve reports consistently is a very good place to start, and that's exactly what USDC is doing right now. The reason why USDC still looks like a better option is because it is backed by two of the largest players in the payments and cryptocurrency exchange industry, Circle and Coinbase, and they are both heavily invested in staying on good terms with global regulators, which is something most stablecoins cannot claim. If USDT or Tether can fix its opaque operating structure, things will get better for Tether as well. Tether claims that it maintains a one-to-one reserve for all USD tokens minted to date. It evades having its reserves audited by third parties, and the founding members of USDC likely recognize this gap in market and seize the opportunity with a better offering. USDC's main claim to fame has always been its transparency. Auditing carried out by one of the world's top accounting firms, Grant Thornton LLP, might not be as extensive as a full audit, but it still puts USDC ahead of every other stablecoin out there. So to end the debate between USDC and USDT, USDC is far less controversial and has less scattered doubts over its reserves. But this does not make USDC perfect by any means, because the company that created the coin could potentially go out of business and would significantly impact the investors' confidence in the USDC. The US government officials in several other countries are now fearing the potential risk of stable coins because these can pose a huge threat to the consumer and financial markets if they remain unregulated, because these stable coins can be used instead of fiat currency, and governments won't be able to track the flow of capital, which can also affect the security of the country. The cryptocurrency space is full of excitement, with new ideas to solve so many problems. Things can be quite complicated and difficult to understand, which is why you need to make your investment decisions wisely. Invest in assets that you can clearly understand, and only invest the money that you're willing to lose, because anything can happen in the cryptocurrency space considering its volatility. If you want something stable in the highly volatile crypto space, stablecoins like the USDC make a lot of sense, especially if you don't want to deal with the volatility of well-established cryptocurrencies. USDC might be the closest thing you can have as an alternative to the US dollar.